everyone. Guess what day it is? It is my favorite day of the week. It's Mortgage Tip Tuesday with It's Your Favorite Loan Officer in the Whole Wide World. Hashtag JLoan. That's right. I am in the building. Look, I got my glasses, and these glasses are like for the, from looking at the screens, I've noticed more and more, maybe as I get older, that sitting in front of the screen for a long time, it gives me headaches by the end of the day. And so I got these glasses and I started using them more now than ever, and it just makes me feel a lot better. So I hope they're cute. But anyways, I'm just playing with you guys. So hey, today's day is National No Excuses Day. And as you may think, the National No Excuses means like, get up, stop making excuses. It's really not. This day is in regards to you getting up and actually stop making excuses for you to do something for you. You have to go out and have fun and enjoy life. Look, I'm gonna be honest with you. The mortgage industry is stressful. Our daily lives are stressful. Inflation is stressful. I mean, everything is stressful. So it just tells you, you have got to take the time, whether it's weekly or daily, whatever it is, outside of work, outside of your kids, or maybe even with your kids, you have got to find some time to do something for you. So I'm going to encourage you today that if you don't have something planned on a weekly or daily basis, I care for you. And I want you to have a good time, okay? Because stress doesn't do anything but cause health problems. And we all know that, like, if you smile, it's like so many muscles, and laughter burns calories. And that's what I want for you, okay? So anyways, now I'm gonna move to my mortgage tip. So the mortgage industry was a little cray-cray yesterday. Now, it's been a little cray-cray for the past year, but weekly and monthly rates have continued to rise, but yesterday was like not good, okay? And so obviously there's a lot of things that are affecting mortgage interest rates, but the biggest concern is for borrowers who are about to go into getting pre-approved, or borrowers who are currently pre-approved, because with the way the market is shifting quickly, if you were pre-approved before, there is a big chance that you may not qualify anymore. And it's very important for you, and it's not just with our company. Look, I want you to use me. I want you to trust me. I want to help you. But even if I'm not the one, I highly, highly encourage you to look for lenders or loan officers that can, at this time, if you're looking to purchase a home, you have got to look for lenders that offer a lock and shop, okay? If you're looking in the next 90 days to buy, if you're not locked and you are qualifying now, if rates do the jump, kind of how it's done in these past couple of months, and then yesterday, like I said, it took a big jump, then you could outprice yourself from the market. And I don't want to have you discouraged or have you go back to renting because we're not smart about our decisions, okay? And so because of that, I do highly encourage you to take a look at our 90-day lock and shop, because we can actually pre-underwrite your loan all the way through underwriting, so you have the security, the peace of mind that you actually do qualify for a home loan already. And with that, we can lock your loan for 90 days. So it gives you basically 60 days to shop, 30 days to close, and you don't have the fear of the market changing and your rate changing, and now you no longer qualify. So I do want to talk about how a shift can happen, and I want to be very clear. I am never allowed to talk about specific interest rates unless I'm going to talk about APR and all that stuff, and I'm not going to get into that. So whenever I talk about a scenario, I'm not going to state what the actual specific rates are today, or where I'm getting these rates from, or what affected this. So just my disclaimer right now, I just want to show you the difference if your interest rate changed 0.5% on a certain loan amount, okay? So we're going to start with a $300,000 loan. And I'm not sure why my marker doesn't work, but $300,000 purchase price with 5% down, right? We're just going to do a conventional loan because I didn't want to get into everything else, okay? That leaves you, and your 5% down is $15K. So that's going to leave you with a $285,000 loan amount, okay? If you got pre-approved last month and you didn't lock in your loan because your lender didn't offer you that, and let's just say hypothetically, okay, rates were on your scenario 6.5%, your payment would have been just your principal and interest, okay? I'm not talking about mortgage insurance. I'm not talking about taxes. I'm not talking about insurance. I'm not talking about any of that. This is just your principal and interest, so P&I, okay? Now, if you didn't lock and now you need to lock, right? And rates are hypothetically, such a long word for me to, put on here, but I don't want to get in trouble with anyone. So let's just say that's where they are today. Now your payment's $95, sorry. Okay? Just principal and interest. Okay? That difference a month is $94.76 a month. That's just principal and interest. Okay? The reason I talk about this is because, one, you may have said, I don't want a payment over $1,900. Two, you may have just disqualified yourself in the market because you only qualified, or you were at the cap of what you could qualify for. Or maybe now we have to change your loan program because your debt to income's too high, and now we have to change you from conventional to FHA just to get you to qualify. It's so many things that could go south if you don't look into a program that can actually lock your loan. Now, not all programs are able to do a lock and shop, so none of our bond programs are available because obviously those are based on availability of funds to help you. But if you're doing a straight conventional VA, FHA type of loan and not using any type of down payment assistance or home grants, then you should really look into locking your loan if you are actively in the home search right now, because you're securing, again, for me, peace of mind to know that this is what I'm going to get and it's not going to change, okay? Now, again, these are hypothetical rates. Rates could be higher or lower depending on your specific situation or what the uses of the home or how much money you're putting down. But again, I want you to keep in mind, for those of you out there that look online, it's just like, oh, wait, well, my lender told me that I could qualify for a $300,000 loan and my goal was not to pay more than $1,500 a month. This is just principal and interest right here. And I have this conversation with my borrowers all the time. If you are not having your lenders, if your lenders are not pricing your specific properties for you to give you a really good take on what it costs to buy this home via closing costs and what this will cost you on a monthly basis, to include taxes, insurance, mortgage insurance. What if you have HOAs? What if you're in a flood zone? If you're not having a lender that's taking the time to do that for you, you are using the wrong lender. And I'm going to be 100% forward with you to tell you, you should call me. And that's just a reality. You need someone that's going to sit with you and really break out your financial goals, not just for now, but even for your future, how long you're going to keep this home, how much you truly want to spend. All of these things are important. And if someone's not talking to you about that and they're just issuing you a pre-approval letter, you unfortunately may be set up for a disappointment later, and I don't want that for you. So I love you guys. I hope this helps you just a tad bit. Of course, don't just like it. Can you share it and comment on the video so that other people could be helped out. Talk to you soon. Bye.